Welcome to the Winnie Podcast. This show is focused on empowering ranchers. Whether you're a seasoned rancher or just getting started, we'll guide you on how to use the infinite banking concept as an alternative way to finance your operations. It's a better way to think about money. Join us as we discuss planning for the future, attracting the next generation, and the art of keeping more money within the family. Here's your hosts, Winnie and Lacey.
Hey, welcome in, everyone. Lacey and I are back at it at our second episode of 2026. Both Lacey and I are inspired today because Lacey ended up sharing with me earlier on this morning a podcast that is produced by Aberhart Ag Solutions. They have a podcast called Growing the Future. And this particular episode was hosted by Dan Aberhart, and he was interviewing a Canadian prolific landowner. And in this interview, and we'll talk about who this prolific landowner is if you don't already know in just a few moments here. But out of this podcast that was shared, there are so many points at which is so relevant to what's coming down the pipeline for like things that people in the agricultural world don't have control over. And we'll speak to those specific points. But of course, we totally advocate for you to watch this specific episode that was put on by Dan Aberhart, because you don't want to miss all the nuances. And we're not going to relive the whole and replay the whole interview with you. But we do want to talk about some solutions in this particular session with you today, because we definitely want to let you know that there's hope. And I think having listened to that one podcast, I think it could leave some people feeling like, oh, what's the point of continuing to do this? Or what's the point of trying to get into farming if we have all this stuff flying at us? And certainly we want to be the lighthouse. We want to be your light at the end of the tunnel.
Yeah, for sure. So when I listen to this episode, okay, I don't take weekends where I just listen to mindless stuff. I listened to this so that I can better serve our clients. But what I want to highlight, like I just found this episode so interesting, but a lot of times what we can face in the agricultural industry, kind of like the, oh, poor me, or like a pity party, or ag producers have such a hard time. They have such a hard business. It's the most stressful. And I'm not saying that that's not true, but there are so many amazing reasons why we're all in this industry as well. And I think that it's important to focus on all of the amazing reasons and all of the amazing things that we get out of being a producer, rather than the negative things that fly around. And so this podcast that I listened to and I shared with you, it just got me really thinking, okay, this is something that we need to address and something that we need to talk about, and like we always do, provide that hope and that peace that there's a way.
Yeah, absolutely. So I just don't want to butcher this prolific landowner's name. Do you happen to know how to pronounce it, Lacey? I think it's like Robert Andjelic. I just don't know. But he is like the largest Canadian agricultural landowner for sure. And so please don't dismiss us because we don't know how to pronounce his last name. So my apologies.
Yeah, he's an immigrant, so I don't know for sure how to pronounce his name, but we're going to provide the link in our show notes so that everybody else can watch it too, because I do think it's an interesting information to take in.
So, like I said, this isn't a replacement to not watch this particular session, but if I can just go over the 12 problems that were brought up in this particular session, I think that would be good just to provide some context. Number one, the banks are under a lot of pressure, and banks are really stressed because other loans are going bad, especially like ones that have big commercial buildings. It's important to note that banks are not angry or trying to target farmers at all in any way, shape, or form. Banks still do see agriculture as a great place to put their money to lend to, right? But banks are also have their hands tied because they're forced to tighten up their own rules with an oversight committee that Canadians have. And in this podcast, I'll let them sort of discuss what that oversight committee is. or organization, I should say. And of course, in this particular podcast, they still talk about how credit is still important and that banks are still needed, and farming and businesses wouldn't be where they are today if they didn't have actually the help of banks. And then fourth is the economy is in a very hard cycle, so to speak. There's a lot of big economic downturns, and they're kind of talking about it in the way of being as serious as 2008 with the subprime market, if not more serious. Okay.
Yeah, he even referenced 1929.
Yeah. But the fifth point is that there's just a lot of, it's kind of like the perfect storm. There's a lot of different problems going on all at once, like debt, real estate, consumer credit, trade issues that just sort of cause this to be a particularly hard cycle. The sixth thing is rules for banks are just, again, I think I kind of mentioned it before, it's just, they're just getting a lot tighter and the banks have to follow these rules. And then shadow banking adds risk as well. And again, shadow banking is talked about in a lot more detail in this podcast, to which you guys can listen to that. And then farmlands also hold value better than many things, is what Robert was also talking about. Land, food, and farming usually hold up better in harder times. And then the ninth is farmland is being lost every single year. Like we lose farmland to cities, erosion, and that sort of thing, right? And it's an actually interesting point of data that they talk about in this podcast about how much land is being lost every single year. And again, we'll let you guys go back to the podcast to listen to that. And then world money systems are quite stressed. There's a lot of change and a lot of power, a lot of power struggle going on, especially with a few countries that are just wanting to not be reliant on the US dollar anymore, i.e. the BRICS. So again, banks, especially in the US, are under a ton of stress. And again, what happens down in the States impacts Canadians as well. And again, farming is just really different from one to the other. So people always need food, and farming resets every year and hopefully survives the downturns better than most industries. So with that being said, that's kind of like the highlighted overview of all the things that were kind of talked about in this particular podcast.
Yeah, and there's actually going to be a part 2. So I'm going to be watching their channel because I don't know when that's going to be released. But I just thought, like, we can't ignore the situation any longer. And I say the situation. We can't ignore our own situation. We can't ignore the state of the economy. We can't just sit here and hope that it goes away and that everything is all roses.
So this is for our existing clients and for those of you who are still kind of sitting on the sidelines thinking, like, should we pull the trigger and implement the infinite banking concept into our lives or not? And sometimes even people who are set up perfect to practice infinite banking, right? They got their policies all set up. They understand the infinite banking concept, but they're not quite ready to put the mindset of IBC together with the actual financial tool of using a dividend paying whole life insurance contract. And again, as Lacey and I get more seasoned and more experienced, our desire is that we are able to help you step by step, help you understand what it means to live infinite banking in your life. Okay. So we'll just take an example that was recently emailed to us. Lacey, what was the email from one of our clients?
So one of our clients had an observation that most people are hesitant to put every dollar that they're allowed to put into their policy. So if you already have a policy, that's your deposit option. So his observation is that most people are hesitant to max out that deposit option. And why? The question is why? And also what they are missing out on by not maxing that out from the beginning.
Okay. So let's unpack that a little bit, because it's actually, even though you said it in like less than a minute, there's actually a bit of stuff there. Okay. Yeah. So one of the things to remember is that infinite banking is not a straight line. Okay. Learning how to implement the infinite banking concept does take time, and it's a new habit that you're actually building into your life. And one of those habits is just realizing that if you're choosing to live the infinite banking lifestyle, your aim and your objective is to make having to lend money from the bank plan B rather than plan A. And in order to do that, in order to keep that focus in mind, part of it is really just, number one, tuning out the noise. If you're a person that just listens to so many different types of information and you're still kind of sitting on the fence yourself about what is going to be the better thing for me to do, what is going to be the better thing for me to do. And if you don't have some really solid objectives about what it is that you want to accomplish within your own financial world, you're always going to be the type of person that is going to let a lot of financial noise confuse you and confuse your situation. Because once you choose IBC, it's really easy to tune out all the noise that doesn't fit within the objective that you're trying to reach. Very easy to do. So that's one of my pieces of coaching, is that when you understand what the problem is, you understand how the infinite banking concept and having that mindset be right in the forefront of your mind about how you finance everything you buy, whether it's personally or inside your own operations, it becomes very easy as to what you're supposed to be doing. The second piece to unpack within that client communication is, what do you miss out on when you're not maxing out your deposit options? Okay, first of all, if you're a person, depending on where you are at in your operations, you're either going to have the capacity to take advantage of maxing out your deposit options for that year, but you don't have to. But if you can, do it, right? But this client of ours is wondering, okay, sometimes I forget why I should just go ahead and do that.
So I think sometimes people need a little time to get used to it. They need to get their feet wet. Some of us are jumping with both feet with new opportunities and new things. And some of us we're going to dip our toes in, see how it is, what the outcome is, and then we're going to become more confident over time. I would say more people maybe lean toward dipping their toes in, but also it can be a cash flow constraint. So depending on how your cash flow is coming in and going out, it might be that some people need to start small and gradually work their way up. So one, I would say sometimes it can be just getting their feet wet, getting used to it, putting in a little bit, seeing how that feels and what the outcome of that is, and then a little bit more the next time. Most people end up saying, oh, wow, that's what it did to my policy. Well, I want to put more in next time. And then they end up being like, okay, this feels good. I want to continue doing this. And like we said, the one clients that we have, they replaced their operating line of credit in just 3 years. We have another client who is well on his way to not needing the line of credit as the first option. It's now going to be plan B and not very long. So
yeah, especially if you're not coming from a family where your mom or your dad or someone you're mentoring with showed you this is how they finance their operations, right? So when you step into the infinite, like exercising the infinite banking concept into your life, and you take out your first policy loan, or you have no idea. It's not like everybody's doing it. Because you don't know what that looks like, because no one else has showed you, it's like Lacey says, it's like if you want to dip your toes in so you know exactly what happens when you put that money into the deposit option and you find out, oh, how liquid is it to me? Like how long does it actually take to have that arrive in my bank account? And is it actually really true that like Lacey and Winnie are not going to be like super nosy in my business and ask me what I'm doing with this money? You need proof, I think, is what it comes right down to, is that having lived that experience that, oh, okay, this is actually liquid.
Yeah.
You can't just take our word for it.
Yeah, you can't take our word for it. And I think like for the cowboys and the cowgirls that listen to our podcast and you're familiar with horses, we don't take a 2-year-old colt and start them and that same day they are ready to go to the barrel jackpot.
Right.
It takes time. It takes a little bit of exposure of the right things along the way. And then all of that coupled into several years of hard work, you might have a horse that is at the NFR or whatever it might be, doing what you want them to do. But that doesn't happen on day one. And sometimes that's how it is in our financial lives, especially with finances, because finances are such a sensitive and personal thing for everybody. Because let's face it, we need money and we need food to survive. And so if you are one who guards your money, carries it like it's an egg, that's easy to break. I like that because you're attentive to that. You're making sure that you're being a good steward. And if you need a little extra time in the round pen, maybe to know that you're confident in what you're doing with your funds and the policy, then there's nothing wrong with that. Now, if you sit on it for too long, you might get nudged a little bit.
Yeah, indeed.
Because we know what you're missing out on.
Yeah, indeed. And I think to our client's point in saying, okay, like, I think he was also saying, like, I think it would be good for you to help us be reminded of what are we missing out on if we're not maxing out our deposit option. Because this client was very hesitant for at least 2 years before he really felt like he wanted to move forward. And so to honor his request, Lacey had sort of touched on that just in the past 5 minutes. But what you are missing out on is the opportunity to help yourself become a person who's more financially self-reliant, right? So the more that because when you max out your deposit option, the quicker you're able to build up your own pool of capital so that when you do need money, you have it for yourself instead of having to necessarily need what the bank has to offer. And to the very point that this podcast with Dan hosting, between him and Robert chatting back and forth, they're just saying like, hey, there's a very good chance that you might not get the lending that you need when you want it, because the terms and conditions of what will help you qualify are going to be a lot tighter than they used to be. And it doesn't matter how good of a position you are financially. Like even if you have a low debt service ratio, because there's a lot of competing factors behind of like how much can the bank lend and how much, there's only so much that they can lend at this point.
Yeah. Well, and that brings up that one point. I really liked what he said about viewing the banks as a partner instead of the enemy, because with these forecasted tightening up the restrictions and the requirements for lending, if they don't see you as a good business partner, they're like, your chances of them doing business with you are lowered. And so I like how he said that even though we want to make the bank's plan B, if we need them, if and when we need them, we want to be seen as a good business partner.
Yeah, you have more options open if you can, like, not only finance yourself, that gives, because of course you're always going to want to do business with yourself because you're your own best bet because you know how you're going to conduct yourself. But it's even better. What they're saying is that you can put yourself in a position where you are able to also get lending from another source if you need extra. And of course, if Nelson was here, he'd just be straight up, don't do business with the banks, period. And interestingly, There was an aspect of this interview between Dan and Robert around how we are part of the problem. And they specifically say, sometimes because of the way lending is built, okay, it's not the bank's fault. It's just how it became and how it happened through a series of events, right, in and of itself. But because all lending comes from, a lot of it comes from other people's money, but a lot of the lending also is fractionalized, which is completely made up of thin air. That is a part of the problem. Like us lending money is actually part of the problem. It's kind of a double-edged sword at this particular stage.
I was driving to town when I was listening to part of this episode, but one thing that really stood out to me is when he said there's going to be lots of bankruptcies and farms lost. Mm-hmm. And that's heartbreaking. Mm-hmm. Like, it's just, my heart just sank, and it made me go to, okay, well, what can we do between now and these times where he's saying, okay, rates are going to rise, lending's going to change. What can we do between now and then to not be relying on the bank?
In this podcast that, again, was done by Dan and Robert, the interview was definitely a lot longer than what was actually posted on the internet. And it probably has something to do with the fact that you need to be a member to get the whole interview. And they talked about this 3-point plan, and they cut it off right before the 3-point plan, just FYI. So I was like, wow, what's the 3-point plan? What is it? So because I don't know what that was, so I decided that I wanted to, well, what's our 3-point plan? What's the plan from Lacey and Winnie that's a 3-point plan to listening to this? Because I think anyone listening to this interview would be like, oh man, I'm stressed out, man. Like, now what?
I kind of felt that way after I listened to that.
Mm-hmm.
I was talking to my mom and I was like, oh my gosh, you have to hear this episode. People need to look after their stuff and make sure they're not a slave to the lender.
Yes. And I think it all comes back down to the same thing. I think it's bringing like real current social events that are happening. But I think what we've always said right from the start is still more or less the same. But I'll just put it this way. We'll give 3 points today to sort of help with things. So point number 1 is just build your own buffer plan, which is doing what we do, create your own pool of money, your own pool of capital. So you have it for good times and bad. And it sounds to me like what they're saying is some bad times are coming up. And the sooner you start, the better. The second point is manage your cash flow really, really well. Just know where your money is going, plan ahead for the big bills and slow seasons. Now, I say this with all the love in the world. It is time for those of you like who have partnerships. If you are in a partnership with someone, whether it's a business partner or your own personal spouse, even if you're the person that typically leads the finances in your household, it is time to speak to your partner and have them help you with certain things. Help them to be your secondary person to remind you of certain things. You can't be the only person that does all the work. And you can't allow the other person who thinks that they're not good with money to not do the work. But if you ask them very specifically, like, hey, can you just remind me on this day that this is due? They don't have to be good with money to be the person that helps remind you when something's coming up. Especially if you're the person, you got lots going on, right? This is not the time to allow our own ego in our relationships get in the way of being good stewards of our cash, because it takes more than just one person.
Yeah, it does.
Mm-hmm. And I would say the third thing is just do your best to come from a place where you're able to make calm decisions rather than super panicked decisions. Because
we want proactive instead of reactive. Reactive decisions aren't always the best. We're not always in the best mind frame to make the best decision.
No, scarcity is what comes to mind. Being in survival comes to mind. And when we make decisions when we feel like we're just surviving, we never make the best decisions because we're only thinking right in front of our face instead of decades down the road. So people who are able to stay calm have more capacity to keep their land and their operations and their options open.
Yeah. I'm giggling because I love those 3 points, but that last point reminded me of this analogy that I heard on the weekend. And it's like related, I'm going to relate it to finances too, but related to cleaning your house or for you guys, your shop, because the shop is usually the men's domain. If this item had dog poop on it, would I clean the dog poop off? And that's how you know whether you need to keep it or toss it. But then as it relates to money, when you're making purchases, shopping, whatever you're doing, managing your cash flow, how many hours or how much time did I have to put into earning the dollars that this whatever is going to cost? And is it worth it? So when we talk about cash flow management, how many hours did it take to earn this much that's came into my bank account this week or this month? And how do I want to steward it? I really like those two analogies about how long did it take me to earn it? And if it had dog poop on it, would I clean it? I love that. Would I clean it off?
Yeah, that's interesting. Another thing that what comes to mind for me is I live in the city. And, of course, when you're in the city, you can drive 3 blocks and be within range of 10 different gas stations. And my partner will always say I don't want to go here. I want to go here because the gas is only $1.04 or whatever. And we're right here, but the gas is $1.10 here. And because I'm the business owner between the two of us. I'm just thinking, well, what am I really saving if I go 3 block where the gas is $1.02 versus right here it's $1.12, $1.10, and it's like a difference of like $2. But my time is worth more than the savings I'm going to get. I'm just gonna defer to spending $1.10 because my time is worth more. Anyways, IBC is so great. Like the infinite banking concept, when it's implemented, just can really help folks like yourself avoid being forced to sell anything at the worst possible time. And we want to see the mom and pops and individuals owning the land. We want to stop huge corporations from owning so much of their own land. We want to, we want to make sure that you guys stay in business.
And part of what IBC helps solve is succession planning. If we're not talking about succession planning, guess what? The corporations are coming to buy the farm because that's the only person who can pencil it out. Mm-hmm. Otherwise, for Dawn and Anita, who are in our book, Farming Without the Bank, Dawn and Anita can't buy the neighbor's ranch because it doesn't pencil out in their lifetime or their kid's lifetime, but the big corporation can. And that's who's going to end up owning it.
Right. And we could probably keep adding on how IBC is beneficial. But I do want to say this because when you do end up listening to this podcast, it starts talking about the different currencies and things like that. And so we want to be able to share with you that the dividend paying whole life insurance contract is a safer place to store your money where you can still use it later. It's not being stored at the banking level. It's being stored within the contract in and of itself. And it is a time-tested contract. It's almost 2 centuries old here in Canada. Yeah.
Amen. Amen. So there's lots of noise out there, folks. So we just encourage you, pick your path, be confident in that path. And maybe this episode that we took in is a little bit of noise, but I think that what we do with that noise is the biggest thing. And so you know where to find us. rancherway.com. As always, you can pick up the book bundle. So you're going to get the paperback and the audio version. Audio version is a game changer. You can also find us. You can watch us on YouTube, find us on Apple, Spotify, or iHeartRadio. Bye, guys.
So glad you leaned in with us on the Winnie podcast. We truly hope you're feeling more informed and empowered to take another step towards optimizing your financial life. Right now, make sure you hit subscribe so you can keep growing and learning with us. Until next time, we wish you prosperity in every area of your life.